Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is May 1st, 2008. In Australia, activity in the manufacturing sector expanded at a faster pace in April than in March. The PMI measured 52.7, led by an increase in production and new orders, while employment declined. Building approvals for March fell 5.7% as the housing market and construction continued to slump. The Aussie-US dollar pair rose yesterday prior to the Fed's anticipated interest rate cut as the spread between the two countries widened. This trend did not extend much longer after the announcement. Instead, the weaker Australian housing data and continuing speculation of a Fed pause wiped away those gains. U.S. personal spending heated up in March, rising 0.4% compared to 0.1% in February. The figure doubled the consensus estimate and was a positive sign for the economy as consumer spending makes up roughly 70% of the GDP. Incomes increased 0.3%, lower than in February and lower than expected. The same report revealed that the core PCE, a preferred measure of inflation for the Fed, heated up in March. On the month, core PCE rose 0.2% and 2.1% on the year, both larger than anticipated. The Fed prefers to see the annual rate between 1% and 2%. With inflation at 2.1%, the FOMC may be ready to hold rates steady as its concern shifts from economic growth to inflation. Weekly jobless claims rose 35,000 to a total of 380,000 this week. The number was higher than expected and continues a trend of elevated job cuts. This week's report is more in line with recessionary conditions as companies shed more jobs as a result of a weaker economy. The number of continuing claims rose above 3 million and was the highest level since April 2004. The manufacturing sector matched March's figure of 48.6, the third month in a row that activity has contracted. The result was still better than expected. Prices continued to rise as 84.5% of respondents said they saw higher prices from commodities and energy. Even worse, purchasing power declines as the dollar continues to fall in value. The dollar had a strong day versus the euro, pairing yesterday's losses and bringing the euro-dollar pair down to its lowest level since March 25th. The decline started overnight, and the dollar's gains were extended as the markets focused on the spending and inflation data near the New York Open. Trading in the pound-dollar pair continues to be choppy. During the European session, UK's manufacturing PMI showed that activity in this sector during April was the lowest in 3 months. The dollar surged against the Canadian dollar, breaking to a new weekly high above 1.02. The Federal Reserve seems ready to stop reducing rates, while the Bank of Canada may have to continue cutting rates to prop up its economy. The outlook for interest rates, therefore, currently favors the greenback. Also, the price for a barrel of oil fell by $2.50 as of 12 p.m., which pressured the Loonie during New York trading. Tonight, Australian releases retail sales data, followed by German sales figures overnight. Also, the Eurozone will post its final version for manufacturing in April. Tomorrow, the week ends with the very important U.S. non-farm payroll data, which is expected to show the economy shedding another 80,000 jobs and factory orders for March. That wraps it up for the day in Forex News. Join us here again tomorrow at cmsfx.com.